This is Eric Muathe at Muathe.com. All is well. As we see markets moving to all-time highs as far as the Nasdaq and S&P 500 are concerned, the question becomes, how long can a market remain strong? Now, of course, to be honest, unless you're on the inside, those of us who are trading, watching, participants in the market, we really have no idea how long a market can continue staying at lofty heights relative to its past price range. So the Nasdaq continues to trend higher, continues to record fresh intraday highs. We see the RSI recapturing that 69.1 threshold, and we can see, because of this movement above RSI 69.1, we are starting to see this pickup in momentum. Now the question becomes, how far or how much farther can this market continue staying stable to bullish? Now, if we take a look at this random example here, we can see that instruments can and do from time to time hold above RSI 69.1 for multiple years. We can see that this instrument moved, and it's just a random stock, moved above RSI 69.1 in the middle of 2017 at about a price range, let's call it at about 0.30, and has since held on above RSI 69.1 throughout all this 3-year period. So net, as long as the RSI is holding above 69.1, there is no major sell signal. And we can see over the last couple of years, because of holding above this superior threshold, the prices are now in the lower 20s. So from 30 cents to 23, throughout all this period, we can see the RSI has held above RSI 69.1. And what this means is that until an instrument itself removes itself from that threshold, you have to assume that markets can continue moving higher. Now, here's an example of the Nasdaq, and this is in the mid 90s to the early 2000 momentum years. Now, you'll notice the most steep move is here in 99 to about March of 2000. And again, this does correspond nicely with the RSI jumping above that 69.1 threshold. We see that it corresponds nicely with a price breakout right here. And from a market momentum perspective, this was a very desirable period for market bulls. Now we can actually even see that if you take this move here, this breakout in early part of 1995, again we have the same qualifications, price breakout, RSI again jumps above 69.1, and this does set the stage for what would be a very bullish 5-year period, where the Nasdaq moved, let's call it from about, give or take, 750 to as high as 5,100 throughout this process. Now, most of this time period was spent above RSI 69.1, as you can see. And so, to answer the question of how far a market can go, and more importantly, how strong a market can remain, is dependent on how long it can hold and stay above RSI 69.1, in my opinion, that is. Now, we can see here, the market finally breaks below 69.1, and the difference is, as we see in the next frame, it doesn't recapture the 69.1 threshold. So this is in about March of 2000. Now notice what happens after that. So we're talking about this break. The market never recaptures the 69.1 threshold. In fact, it goes on to deteriorate, and this is the famous .com bear market drop. So as long as we are seeing the market holding above RSI 69.1 as far as the Nasdaq is concerned, we can theorize that the market should remain stable to bullish. And that in some way can be a guide. Is it 100% tight in terms of timing? No. But generally it can be a decent guide as to what to expect in terms of momentum, in terms of stability, as long as the market continues trading above RSI 69.1. And of course, at some point, things are gonna change, and this market is gonna see the opposite side of a bull market, which is a drastic, aggressive move to the downside at some point. This is Eric Muathe from Muathe.com. Love and light and love. Namaste.